Hello, everyone. I just have to test the microphone out real quick here. Let me know if you can hear me across the various streams going on right now. That includes YouTube and Twitch. And I guess X isn't running right now, so we'll have to try to get that fixed by Wednesday's live stream. But in this case, just let me know if you can hear me okay. And we're going to get started in about a minute here. All right, let's go ahead and get the music under control. We're going to get this rolling. Hello and welcome to Macro Mondays in the new year of 2024. Happy New Year's, everyone. It is a new Macro Monday. It is a new beginning for this channel, for this live stream series that we're doing here. And we are, of course, here on Landy's Crypto Corner on YouTube and Dr. Crypto Landy over there on Twitch. If you are on Twitch, I do suggest that you come on over to YouTube, as the plugin for chat on Twitch is a little buggy, and it's much easier to chat with you guys and see what you are talking about if you head on over to Landy's Crypto Corner on YouTube. Pretty soon we will be streaming to x.com, formerly Twitter, where you can find me at CryptoLandy. And I will post, typically I will post, charts, Bitcoin in 60 seconds videos, which are the shorts videos here on YouTube. And, just my thoughts about crypto in general, and maybe a little bit about the Bills every once in a while. If you're not familiar with that particular team, that is an American football team out of Buffalo, New York, that I happen to be a fan of. So I do apologize if you're a fan of, let's say, the Cowboys or San Francisco 49ers or, New England or the Dolphins, as we do have a Week 18 matchup, squish the fish, as they say in Buffalo. Anyway, it's a new year. It's a new beginning. Everything's new. We're going to turn over a new leaf. We're going to start by looking at Bitcoin here on the Bitcoin in 60 seconds chart. This is the chart that you can typically find in those Bitcoin in 60 seconds videos. Of course, they're about 60 seconds long. And in those videos, I give you my targets based on a ton of analysis being done on the higher term timeframes and lower term timeframes. Typically, I will be showing you the daily timeframe in those videos unless otherwise stated. And I'm giving you my bias for targets on a closing basis. Now, that does mean if I'm looking for a specific target to the upside or downside, I'm looking for a level 2 break on a close. If it does get hit on a wick, that can also fulfill criteria for a target, but for continuation, we are looking for closes in most cases. Now, when looking at this Bitcoin in 60 seconds chart even, you can see that Bitcoin, hung out right above this weekly at 41.8 on a closing basis on the daily. And it is currently trading above the weekly at 43.2. Now it is, somewhere in the mid to low $43,000 area right now, and headed towards that upper first standard deviation of the Bollinger Bands. Now, if you're not familiar, if you're new to this, these bands here are Bollinger Bands. They are here to kind of show us the volatility read on price action. So during phases of compression, which we do see expansion to compression here, we can get a good idea for the standard deviations away from the basis that would pick up volatility in a specific direction as related to the bands. Of course, within trend, support and resistance, we have volatility, and that creates momentum. In this case, we can see that if Bitcoin were to close above the upper first standard deviation, which is coming in at 43, around 560, 570, I would say 43.6 is probably a safer bet to go with. It does oscillate live. If you do want this indicator, it is free. It's linked in the video description of every video that I post here on YouTube. It is not a publicly searchable indicator, but it is a free indicator that you can just add to your chart, and it has a bunch of other bells and whistles in there. You can read about that in the description section of the indicator. It is called the Landy Bands, and it is a modified set of Bollinger Bands with a volatility metric down here called the BBWP. Thank you very much, Caretaker, for allowing me to pilfer parts of your script for this. Again, he is an absolute monster in this space when it comes to, in a good way, creating just really useful free indicators. Also, he does have paid indicators if you ever want to go check them out. I have no affiliation with any of that. This is free though, and it comes with the BBWP down here, which lets us know what the volatility read is looking like. We are currently in a contraction phase here on the daily with a 28% BBWP read, with the moving average at 33. So this does mean that BBWP is under the moving average. What does that tell us? That tells us that we are in a bit of a consolidation phase right now, and we can see that reflected in the Bollinger Bands trading just above the basis. So between the upper first and lower first here, that's typically your consolidation zone. If we do start to see Bitcoin close above the upper first, we will see volatility tick up. If we see it closing in and around that upper second, and especially above it, we will see volatility aggressively increase. Once it is over the moving average and Bitcoin, let's say, is above the upper first and second, that does mean that we are kicking off expansion to the upside. And then we start looking at areas of interest on horizontal support and resistances for potential areas for Bitcoin to pause at in the lower term timeframes and or continue through if it does break out. Same goes for breakdown. So if we do see Bitcoin closing below the lower first, which is now at 42,100, and subsequently break down from the weekly at 41.8, I would be looking for volatility to slightly increase on a move down to the lower second, which is right around the wick lows here of the prior low at 41,300. Now, this does mean that if Bitcoin were to break down from this wick low and close below the lower second standard deviation, we're likely to see volatility increase, and we'd be targeting the next big area of interest, which are the closes and wicks down here in and around the 40,000, 41 to 40,500, and then 40,150 at this wick low over here. If that is dropped, I would be looking for the weekly to get tagged down here at 39K to the monthly at 38,500. Now, if Bitcoin does head up from this weekly here and specifically get above that upper first, which is at that 43, we'll call it 6, if Bitcoin does head up that way, I would be looking for the close open here, coming in at $44,000 to the wick high at around 44,400 to 500, which is right around the close opens over here. Above there, I would be looking for the wick high at 45K to get ran to the monthly at 45.5 above there, and I would start to look for that next monthly at 47K to the monthly swing high above it at 48,240 to around 48.5. and possibly more on top of that. We'll cross that bridge when we get to it. I'll probably have an update if we do start to see this monthly specifically at 45.5 closed above, because that really will update the outlook for this monthly and monthly swing high area and possibly more to get ran. So in this case, if we did see Bitcoin break down from this consolidation, specifically dropping the wick low aggressively without bouncing at this weekly and monthly, that being 39K at the weekly and the monthly at 38.5, then there is a pretty big zone of support that we did see Bitcoin consolidating at right around this weekly at around 37.7 to 38K, just below that monthly. We did see a few spikes into that monthly, by the way. So I would be looking for somewhere in between this monthly zone and weekly zone up here at that 38.5 to 39K to this weekly at around 37.7. If that weekly at 37.7 is dropped and we could see swings below it, I would start to keep an eye on this low on a close here at around 37.250 to the wick low at 36.700 or so. below there, and I would be looking for Bitcoin to run right back to this weekly here at around 36.2 to 3. If that is dropped, then we start looking at the next monthly at 35K and the weekly directly below at 34,750. Obviously, that's not what we are seeing occur right now. That is just if this particular consolidation were to break down. Quite frankly, this is a pretty bullish consolidation. If we look at momentum, we can see that momentum will shift back to the upside. Obviously, we have trend in place. This would be a higher low being set today. And we do see that the monthly, or I'm sorry, the daily, not monthly. We will get to the monthly though. The daily momentum pivot is at 43,411. Now, in this case, we can see that, yes, there is some lower highs in here on a close and on wicks, and on swings. But we can see that there is a higher low being developed here. And, well, if it closes like this today, it will be set. We're already kind of hitting some of the primary criteria for that. Any close above this guy here at 48,581 would be a technical higher low on a close. Taking out this wick high here, which was right into this weekly around 43.2, will also solidify the move that we're seeing now, right to around that 43,500 area, and then possibly a test into that upper first at 43.6, which we might see while we're streaming. Who knows? Above there, of course, as I said, then we're looking at 44 to 44.5, and then 45K at the wick high to that monthly at 45.5. So that would be kind of the short and intermediate term stuff to look for to the upside here should this low be set today. And we can see that volatility, is cooling down, as I noted, on the landing bands here. This is the dedicated BBWP Bollinger Band with percentile indicator by caretaker. So I just add this so that you can see it in a charted format. Obviously, this is free. You can search this one. Just type BBWP into the indicators tab on TradingView, and you can add it to your chart as well. And in this case, if we do start seeing Bitcoin close above that upper first standard deviation and start heading towards the upper second, which to kind of point out where the upper second is, that is right around the highs, kind of, in between the close open highs here at 44 to 44.1 and the wick high at 45, coming in there at 44,300, kind of splitting the difference there. And in this case, if we did start seeing that, we would most likely start seeing the BBWP follow, that being BBWP moving up. Once it is over the moving average and BBWP and the moving average are in sync, pointed to the upside, and we start seeing Bitcoin close above the upper standard, upper first at minimum, and preferably the upper second standard deviation, then we are looking for price expansion to the upside to be sustained, not just rejective or a bearish retest of the highs, that kind of thing. In this case, this isn't even in bearish retest territory just yet. Bearish retest territory would be if it dropped the lows, and then came back, dropped this last low and then came back and retested bearishly. And in this case, retesting the highs and getting rejected is not a bearish retest. That would just be a rejection. So we do want to make sure that we understand how these things actually do work. As there is a lot of people on crypto Twitter and crypto YouTube that don't really explain that. They just, look, it's going to go for a bearish retest. A bearish retest of what? The highs? It didn't break down from anything to bearish retest just yet. This would just be a test of the highs. If it does reject, then we come back to it, see if it drops this low. And if it does reject first pass, I will tell you that's not necessarily bearish right off the bat. It's only once this low, especially on a close and a wick low drop, that we start looking for some further downside, obviously locally in terms of structure, and then supports down below. Now, in this case, that would be right here at $42,000 to that last wick low at 41.3 that we pointed out just a moment ago. And we can see I've got another chart here. This is our typical streaming chart. And, the music's playing for me in the background. I was wondering, did I not turn off the music? In this case, we can see that Bitcoin is above the closing daily low set criteria right now. And then it's also above this wick high of the low side candles here where the low would be set. This is actually what I would want to see to complete a full swing. Now, it's already kind of getting to some of the initial target areas as it is. So we do need to exercise some caution until we see some of these areas reclaimed, specifically that, 43.6 to 44K area above, which would be the upper first to this close open over here. And let me get the arrow so that I can show you that. I think you get what I mean, but in case you don't, that would be the upper first to this close open at minimum, and then we can start targeting the highs above there to around that 44.5 to 45K. All right, so this does present an interesting setup on some of the longer term timeframes, but let's go through some of the shorter term timeframes because we will get a very good, actually, RSI on the daily. I did want to bring this up. That's why this chart is here. We can see that there is another drive of hidden bullish divergence here, and we can see that it is threatening to populate today and get above this 12 simple moving average here on the RSI chart, which is sitting at 43,380 at the moment for the simple moving average. Generally above there, I'd look for a test into the edge of the bear, in this case, bullish control zone, not bearish control zone. Bearish control zone is down here. And the bullish control zone is currently coming in at 44,655. So that would put it right around the closing highs and headed towards the wick high of this particular move and consolidation range. So that's kind of the next big area. We are starting to see that this could confirm at the end of today. We just need to see the follow through with a reclaim of that upper first to close open just above at 44. So that would solidify this as, heading to that area and heading back to the highs. Obviously, we have the 43,411 being the area to turn for momentum here. We can see that the 12 hours already giving us a bit of an edge. Now, if the 12-hour does close today above its upper first, which is slightly below, coming in at 43,450 instead of that 43,600. We do start seeing that closed above, we're probably going to see the daily closed above as well. But in this case, the 12-hour is kind of giving it away. We had a bit of a range look on the bands here after expansion. It's all just been compression from there on out of the bands. We have seen a little bit of volatility from the upper second standard deviation down to and below the lower second standard deviation as we've seen this compression occur. And we're getting that bounce back. I would be aware of rejective areas and look at where that's coming in right at the upper second at $44,000. So keep an eye on that. If it does get above there, it's breakout time and expansion time for the upper second standard deviation and 12-hour chart that's likely to lead into the daily chart. And then we're looking at some of those deeper levels that we talked about just a moment ago. All right. In this case, we can get an edge for the momentum here. We're looking at 41.9 for this 12-hour closure. It seems to be trading well above there. So this is indicating that this is going to continue heading to the upside. And, it's nothing too crazy. This is stuff that we've talked about last week as well. Nothing that we haven't already covered in one form or another, especially when it comes to support and resistance plays. Now, from this current structure, there is a few implications, and you're going to see people drawing all kinds of different patterns. I don't think the patterns are really going to matter too much, but when looking at the daily, we can get a little bit of local interest here by pulling a fib. We did this last week. We can pull from the high to the low of this current consolidation range. And we can see that the next big area above the highs here is a 1272, and that's coming in at 46,500. So that would put it above the monthly at 45.5 and heading towards that next monthly at 47,000. Now, those are monthly closes. You can see that the 1414 is right around that $47,000 range, and that is coming in at 47,175, so almost 47.2. And the 1618, well, that just so happens to come in right at the swing high from this guy back here. So let's go to the Bitcoin. This is our monthly swing high. This was the big swing high that really kicked off the lower high of the bear market that once the lows were dropped, we were in a downtrend for some of those longer term time frames, specifically the monthly. In this case, that's 48,240. We can see that the 1618 is coming in at just above there. As I had mentioned, I'd be looking somewhere around that 48,240 to 48.5, maybe more after that. We see the 1618 is coming in at 48,385, so almost 48.4. So that falls right in between that swing high area and that 48.5 target that I talked about. No, I didn't actually plan that. I've been saying the 48.240 to 48, 48.2 to 5 basically for quite a long time before we even saw this drawdown. That is just based on support and resistance. Give it a little bit of slush up there. If it does happen to get above there, we can see the 1786 is coming in at around $50,000, just shy of it at 49,220, and the 1888 also coming in just shy of 50,000 at 49,799, and the two spot is coming in there at $50,000 and 500, 50,500, I should say. And then if we go up the fibs here, I don't have too much past the the 2414, but we got the 272 up there at 52 to the 2414 at just under 53. So by the way, when we get to those areas, which we eventually will, those are going to be key areas that were from major breakdowns on the higher term timeframes from the last bull market cycle. So we will look at those when the time comes. Now, there is an argument to be made for a trend fib as well. And, you can take the entire move off the lows for your trend fib if you want. And that does mean that we'd have to go higher term time frame like the weekly. And, there's a few different ways that you could pull a trend fib like this. You could pull it from the lower low to the higher high breakout and ignore the higher low. You can pull the higher low to the higher highs up here at on a close. It's about equal highs. So, and then down to that spike low into around 19.5. And you can, extrapolate out from there. You can go out to the monthly and you can pull the trend fib, which would actually bring you from the actual low to the high up here at around 31.8 before the consolidation to higher low that set the major low over here, which solidifies the bottom down there as a macro low. We'll do that one just because, if you're doing too much and not keeping it simple, it's probably going to end up a mess. So we can kind of go here and bring it down to that higher low area. We can see that this is on log. We got to make sure our fib is on log as well. It is. And we can see that right now we're above the 618 and 702 here. You don't really need to know the 702 in my opinion, but I have it there because it was a request. But Bitcoin is finding some resistance at this 786, which is at around $44,000. Above there, we've got Torque's venerable 888 at 47,300. Now, again, this is coming in right in the same areas. We just did a local fib pull with extensions. And the 1272 and 1414 was coming in, I believe it was a 1272 coming in right at that 46.4. And then we've got a kind of a range above there with an 888 on the monthly for a trend fib pull coming in around that 47.4 area. Above there, we've got the one spot extension, and that is coming in at 51.4. I do believe that's somewhere around a Fiboswani target, if I'm not mistaken. The 1272 above there is coming in at 62,500. 1414 is putting it, hey, look at that. It's right at the highs at 69,300. And in this case, the actual wick high of the Coinbase move was at $69,000. So technically it's a little bit above the high, but this is a very good trend fib to pull. On log, you can see that you've got a major fib lining up with the all-time high there. And of course, we have the 888 also lining up with this close open over here. We've got the rejected area over here. That's going to be a big one. So right at that swing high at that 48,240, you can see there is a major trend fib. You can pull regular fibs will come in here as well. So if you wanted to just take the lows and do a fib extension off of them, you're more than welcome to do that as well. And you're just going to, this is all about finding confluence. And in this case, you can see that we're above the 414, the 1414 in this case, that was rejected. Oh, hey, look at that. Bitcoin closed above the upper second standard deviation. We're going to talk about that in just a moment. So in this case, we can see that fair game is all the way up to the $48,000 to $49,000 level. So the close open up here is coming in at 45. 45.5. That's the big area just above price action. We've got the wick high at 48,240. We've got the upper third coming in at that 1618 on the monthly here, and that is just below $50,000. So we've got confluences everywhere. Basically above the 48 2 to 5 area, we're looking somewhere around $50 to $52,000 roughly. It is an even number. If it pushes past there, then we can start looking at those deeper targets, in the 55 to 58, $60,000 level, and then the all-time high. As I do think price would aggressively move up after that. So we've got a lot of fib stuff that we just went through. To some of you, that may not make a lot of sense, but Fibonacci numbers do work. It's understanding why you're pulling the pull that you're pulling and where does it line up or have confluence with horizontal support and resistance. Does trend support what you're trying to pull the fib for? All of that kind of stuff. So, it is a deeper subject to get into. No, Fibonacci is not hocus pocus. There is just about every single trading algorithm that you have interacted with knowingly or unknowingly uses Fibonacci numbers. So anyway, not something, not a soapbox I want to get on right now, but they are valuable, but they must have confluence. That's really what it comes down to. All right. In this case, I do want to pull just this local high to low structure before we go. And you can see that $30,000 is the 618. That is the big level on any major retraces that you want to pay attention to, down to that 50% level, which is currently coming in below the last big higher low on the weekly, but above the higher low on the monthly at the 50% Fibonacci. You do want to see that. It's also got support up just above it at the basis there on the monthly, coming in at 26,400. The last higher low of the weekly was 26.5. So, it's all coming in roughly the same area. Gotta love it and want some more of it and all that stuff. And we can see here on the monthly, Bitcoin has now kicked off expansion of the Bollinger Bands. Now you notice that I'm being a little careful about what I'm saying here. Bitcoin has kicked off expansion of the Bollinger Bands in an aggressive way by closing above the upper second standard deviation. Now, as long as Bitcoin is closing daily candles above the monthly upper second standard deviation, which is coming in at 42,130, then the highs at 45.5 to that wick high at 48,240, and even the next wick high above it with this close open right around that area, so at 47,000, we have a $50,000 wick high. And then we have a $53,000 wick high. So all of this is fair game. If we see a breakout above there, then we start looking to the high side of the lows at around $56,000 to $57,000. And then the actual closing highs up here at 58 and 61.4. So 58 to 61.4. And then the all-time highs here at around 65,000 to 69,000. This is all fair game now. Just understand that this is what technical analysis looks like, especially when you have expansion kicking off on a monthly time frame. Now, in this case, I am looking for, as long as Bitcoin is closing those dailies, for these areas to get hit. If the upper second standard deviation is dropped on the daily, look to all those local supports that we just talked about earlier in the stream. Below there, and those local supports, we can start looking at this upper first standard deviation on the monthly. And the upper first standard deviation is coming in at 34,500. Now, you may note that I mentioned on the Bitcoin in 60 seconds chart that if Bitcoin were to drop this area here at the monthly weekly at 38.5 to 39, and then subsequently drop another big area of support at 37.7 to 36.2, then where do we start looking? Well, we start looking at that monthly at $35,000 to the weekly at 34,750, which, by the way, was resistance, back tested to the freaking penny, and then off it went. So big area to pay attention to, especially now if Bitcoin were to head down and break down through those areas. The upper first standard deviation is there. A little bit of a history lesson. Let's go ahead and take a look at the index chart here. And for those of you that have been around me for a while, you know that we've already done this many times. But we had the 2016 expansion. And after the expansion, it went and swung the what? Oh, wait, that was the lower high on the monthly that kicked off the bear market. Interesting, right? Well, we saw the move off the lows. Nice double bottom there. Didn't have lower lows except on a wick. Moves up to the upper second, closes above, puts in a nice big candle, swings that lower high in the monthly, comes back down to find support where? The upper first standard deviation on the monthly. So when it lines up with horizontal support and resistances, you're really looking to these areas on any kind of a major time frame downtick after expansion. Looking for those areas to get picked up, quite frankly. That's what we're looking for. So we can see that we did not have this same we did not have the same type of look where we had expansion, swing of the lower high, and then higher low again and move on to a nice big bull run. We did not have that same look back here in 2018 into 2019 because we didn't have a lower high on the monthly. We just had a high. We had a consolidation swing, so we had a swing low and swing high put in the same candle over here, but this was not a lower high on a close. In fact, it just went down to make a higher low in the macro grand scheme of things. And then it went up, spiked, still on compression. We weren't seeing expansion. So this is not like 2019, right? What we're seeing now on Bitcoin. In this case, we spiked the upper second and we got what? A lower high to a what? Well, we technically got a higher low, lower high, lower low and a close to what? A higher high. We did get a little bit of a swing up to that upper second standard deviation, came down for support on compression. And where did it find support? Found support on the upper first standard deviation, got expansion there shortly after, and off to the races to new all-time highs. Nice little double top there, and back down into a macro downtrend in this case. But the downtrend didn't last very long because we had these lows broken, we had higher highs, we had almost a higher low here, but it was rejected. It was not a higher low. It ended up being a lower high to lower low. So we had a downtrend here. We then had that low put into, come in over here to a lower high. We did get that confirmed, by the way, between the June candle and the August candle, but then immediately after got our nice higher low. This becomes a major low that solidifies this prior major low as the macro low, and now we have an uptrend. Yes, we do still have the lower high from the bear market that needs to be gotten above. Now, one of the things that I noted is in 2016, it swung the lower high of 2014. Well, when you look back here, you can see that on a close, and from 2017 to the 2019 lower high, when we started to move up, we did get what? Well, we got a higher high on a close that did not pass the wicks of the lower high of the bear market. Now, immediately, what did we get thereafter, though? We didn't actually get a 3-candle closing high, but we did get a swing and a close to a higher low and boom, up. But we did get a nice little swing high. There is a difference between swing highs and closing highs, swing lows and closing lows, because you can get a consolidation structure, much like what we have back here on the monthly time frame. And nope, that's something that we can have on there. I thought I had a swing chart here. All right, so we technically have a swing chart higher low, higher high structure going on here anyway, right? So we can take this, but they are different it's different than closes. Because when you have a swing high and a swing low and the closes are all in between the swing highs and swing lows, you have consolidation. Now, it's not until you start seeing a structural close high and low that we can then start targeting the swing low and swing high. And then once we get closes outside of those, we look for continuation in those directions. So in this case, we had the bear market swing high. We had a swing higher low, swing lower high, swing lower low, swing lower high, swing lower low, swing higher high, swing higher low, swing higher high, swing higher low, and then swing higher high. But on a close, we had really we did not get a closing higher low. It did not close above this open over here. And so this would just be one move down and then a swing higher low, but and this would then turn into a closing lower high right here in April of 2022 that led to the closing lower lows. Then we get the closing. We did not get a closing high here. We did not get a closing high right here. We didn't get a closing high until we saw this 3-candle structure right here. That was a closing lower high again, but it was led or followed rather by a closing higher low. So that's what solidified this as that major low. So we had this 3-candle high structure from June into August, and then that same August close then formed the 3-candle low structure on a close into October. And once October candle came in, we already called this. This was your big major low that solidified this low back here as a macro low. Now we are looking for continuation to new highs this year. How high can it go? Well, no one really knows, but there is a few ways to start deriving price. We can again move back to fibs. Now we cannot really discount and we cannot look past these areas here, but you can see the 1414 is at the highs and higher on spot here. The next big area to look above would be the $86,000 level at the 1618, 1786 at 102, and then the 1888 up there at 115 to the 2 spot at around 130,000. Those are the big areas that I would be looking at. We will track that stuff and look for other confluences with other types of fib pulls when the time comes. As it stands right now, this is not the time. Now, you do want to note that earlier I had mentioned, Filecoin is dead. I wouldn't be looking into that. Sorry, I just looked over and saw Filecoin, and I mean, you might be able to trade it, but I wouldn't be holding it for the long term. That's for sure. Once it pumps, get out of that thing. Anyway, sorry for that little aside. Yeah, you guys over there. Well, you can hear me before they can. It's just about a 20 to 30 second delay. So you may have noted that I said we're getting confirmed expansion of the Bollinger Bands on the monthly. And we can see that on the monthly here, we have BBWP expansion. It is at a 19/17. But wait, you might be asking, wasn't that higher last month? It was. Which, let me tell you something. Boy, oh boy, oh boy. That does mean this is mean reversion still. Why? Because there's a lower high just above price action, right? The lower high of the bear market is just above price action. We are in an uptrend. We need to take that area out. Once we take that area out, we're likely to see even more compression to expansion. And once the all-time high is broken, that's when we're going to see volatility in price expansion, or BBWP. I do want to note that over time, these volatility expansions have gotten a bit weaker. And they've all been to the upside except for this one right here, which was a volatility expansion to the downside. So this is where Bitcoin is changing over time. And we can see this reflected in the quarterly, which of course we just had a close open. We only saw volatility expansion uptick a little bit here. Now, Bitcoin also closed above the upper first standard deviation on the quarterly. Oh, hey, we're looking at exactly what I was talking about in Friday's live stream last week. And that is that closing above the upper first, which is coming in at 42,500 now, does make available the upper second, but we're probably not going to see the quarterly get expansion until we get a close on or above that upper second standard deviation. Now, in between the upper first and upper second, it might start to turn and get over the moving average, but it's not until we see that close above the upper second that we're really looking for quarterly volatility expansion to the upside. Quarterly looks great. The lower first standard deviation, by the way, is moving up in a big, big way. This is very, very bullish. That is nearly at the bear market targets for many of the people that were calling 12K. I do not think that Bitcoin is going to get there. It's an awful long way away. We're seeing compression. This is going to aggressively move up quarter over quarter. But what am I trying to say here? Why am I bringing up the quarterly, you might be asking? Well, it's not until we see a close above that upper second that we're really going to look at quarterly expansion as being a big viable thing, right? And this is coming in at $58,000. Oh, that's funny. That's this close open over here. So we are looking for the all-time high in the quarterly to get closed above for volatility expansion. And that just ties in with everything I just explained about the monthly. So that does mean that for those that might be looking at the 2025 timeframe as being the macro high, the longer this takes to get there and actually start getting expansion on these longer term timeframes, well, means the later that all-time high is going to get pushed off till. Now, that doesn't mean that other things can't happen, other factors can't play into this, but we're looking at lengthening cycles. We're looking at longer form consolidations. We're looking at, what we just saw, a double pump on Bitcoin in the past, 2021 timeframe. We saw a double pump instead of a blow off top. What does this indicate? This doesn't indicate that it's topped forever and that it's never coming back, obviously, and it's going to go to 8 to 12K. Doesn't mean that it can't from here either, but it typically means that we're going into a consolidation. We got expansion and a tap on the lower second for the first time in Bitcoin's history. Anytime I've ever seen this in any asset or indice with a longer time frame and a larger data set to be looking at, this has always led to longer form consolidation, typically sideways and up when you're looking at assets and indices within the major markets around the world. In particular, I'll be, I'm vaguely referencing stocks, specific stocks, and in some cases, the entire indice for Dow, NASDAQ, and SPY. But in this case, we're looking at what it's showing us. This was a macro consolidation, and now we're kicking off macro expansion. But it's still all within a big range. And until the range is broken, then we can end, or if the range just gets swung and then marked up over time, we could just see a slow roll markup with just massive volatility ranges, which then, of course, are going to lead to this is the bull market, this is the bear market. And yes, you'll have bull and bear phases within this massive consolidation. But when the consolidation ultimately resolves, I highly doubt that it's going to resolve to the downside. We are looking at a massive macro consolidation, in my opinion, that will, over time, eventually lead to a massive move to the upside. What does that mean for markets all over the world? Well, that's a much larger, consolidation, much larger conversation. I got to consolidate my words here and start moving on. All right. Look, we can take a look at this on the yearly, and this is going to be the big meme for this January candle, and that's, hey, look, Bitcoin has really only had its inception went down, right? It's listing, basically, it's open exchange for its charts here, kind of going down. There is the prehistory for this stuff as well. But when looking at this yearly chart, you can see typically we've had 3 to 4 yearly candles to the upside. Obviously, much easier to keep going in the early days there. Then we get the 1 yearly red candle, 3 up candles, 1 yearly red candle, 3 up candles, 1 yearly red candle, basically looking for 3 up candles. That would imply that 2023, 2024, and 2025 would be green. So does that kind of fit the time frame for, a macro high being put in on Bitcoin? Yeah, but it could be the very end of 2025 going into 2026 that occurs. So I've been seeing a lot of people just putting 2025, and people are thinking, oh, there's only 12 months left of this particular upside move. It's like, no, it's 2025 is an entire year in unto itself. So the longer that it takes for things to actually start getting volatility expansion on Bitcoin, the later it would push things into 2025, possibly even into maybe, throwing a spike high or a higher high in 2026. So this is bullish. I know a lot of people will get very bearish whenever we do see a high put in on the weekly. So let's go ahead to the weekly chart here, and let's start talking about this. So off to the right here, you can see the Bollinger Band levels from the daily here. This is a separate indicator that will soon be integrated into the Landy Bands, so that you can look at multiple time frames with the Bollinger Band. So you can have the regular Landy Bands on, we're on the weekly, and then I can see the daily Bollinger Band set. You can see that the lower second and third are still bracketing that upper first standard deviation. So I do think on any pullbacks, as long as Bitcoin is trading above the upper first, the upper second is available. And that's coming in at 47,500. So, that's those monthlies up there, that monthly zone between 47,000 and the swing high at 48,240 to 48,500. That is where the weekly upper second is. And as long as Bitcoin is trading above the upper first, which is coming in now at 40,800, so right around $41,000, we see that the lower second on the daily is coming in at that 41,365, so basically 41.4. So we've got a range. As long as Bitcoin held the lows basically here, I'd be looking for it to keep marching up and to the right. And yes, it's a pretty volatile local range, but we've been blessed with awesome volatility to the upside. So this is not unexpected by any stretch of the imagination. Now, we still haven't even seen a swing high put in on the weekly. So context is everything. Big downside moves that don't actually close on a high, make a high, and or, start, breaching the last swing low, which, by the way, if we see a really volatile move to the downside, even to the basis band on the weekly, which is now coming in at $34,000, well, that's well above the support area down here, and it's well above the last swing low. So we'd still be looking for higher lows all the way through, unless we see the 26.5 swing low dropped. Now you could take the close as well if you like, and that's at 27.2 or so. And, that's going to be the big area to look for if we do get a massive dump off that then puts in, as it stands right now, we need to see for a closing high to be, we could get a closing high below here now. So if we did see a close come in below this 41.4, which just happens to be what? The lower second standard deviation on the daily. So if we get a close below there, we would also be getting downside expansion on the daily, targeting that weekly. If we saw a weekly close below there, then we have a high on a close. This would also likely paint a swing, but it's probably not going to paint a swing high until we see something like $40,000 dropped. So basically 40 to 41K. If that area is dropped, we'd see a swing high put in. We'd also see a closing high put in, but that has not yet happened. And if we do see that happen from here, you're going to hear bears screaming from the rooftops, bring it back down to all these crazy targets. We're going to go swing the macro low. We're going to 12K. We're going to 10K, 8K, 5K, 0, whatever it might be. But it's still just the first high after a breakout, and we'd still be looking for higher lows. And once we see a higher low come in, what do you look for? Well, we would be looking right back to the high. If that gets broken, trend continues. If it doesn't, puts in a lower high, we could be looking at a structure change or a long form consolidation, much like what we saw back here. So if we do see a high put in, just know you're gonna hear a lot from the bears. You're gonna hear a lot of negative sentiment, but keep everything in context. This thing just got expansion on the monthly. That upper first standard deviation is right around where our major areas of interest are coming in. Again, the upper first standard deviation on the monthly is coming in at a big monthly level and weekly level at around that 35,000 at 34,750. That's this low over here. It's right around that area. So there's no reason to really be bearish until we saw, a 26.5 area dropped. And even if we did, I still wouldn't be bearish. I would be looking at that as a blessing in disguise because expansion has already begun kicking off, and it is upside expansion in this case. And I'd be looking for follow through. So All right, that's our New Year's take on Bitcoin. Let's go ahead and peruse the chats here. And before moving on to Dixie, gold, and traditional markets, which I don't, I haven't even paid attention. Traditional markets even trading today? No, no, it's everybody's off till tomorrow at minimum. Yeah. Okay, so you guys are just doing. What are you doing at the shop right now? You're just prepping for tomorrow. Wow, look at you try. Oh yeah. For some of you guys that are still hourly before you get on commission, you try to get in the time and a half pay. Awesome. Yeah, keep doing you. Keep doing you. Okay, yes, some of you have FINRA tests, FINRA exams. So we got a few. Okay, so series 24. We got 2 series 24 and a series 57. Cool. Yeah, get that studying in. You need it. All right, so let's go ahead and take a look at the chats. Hello, Spin. Hello, No Name, Jedi, Bobby, Cheryl. Hello, Don. How you doing? We've got quite a few others, just not chatting right now. Hope everyone's doing okay. I think I answered Cheryl's question there. Got a Cowboys fan in the house. Hi, Bobby. Have feeling the ETF stuff is a bunch of fluff. No, it's not. It's not a bunch of fluff. It's big liquidity. People's take on it, I think, are the ETF has major implications, and it will have major implications on price. But it's all going to be within the context of what you're already seeing on your chart. It's not going to defy the rules of your chart. So when reading sentiment with all these characters on Twitter and all the PFP gang, I call them, the profile picture gang of influencers that really don't back up their takes, but just have a lot of opinion. There's a lot of guys that are very good that have informed opinions that you should be paying attention to, that might even run counter to my own opinions. There's really good Rickus, Credible Crypto, MDX. MDX kind of has the same outlook I do. I think he's looking for a deeper pullback, which we might get, but when it comes and where it comes from is what we'll evaluate trade by trade or level by level. Eric Crown, another one. So, hi Sam. Landy sounds like he's casting a sports ball match. Yeah, I drank a lot of coffee today. Let's see. Spin, you might be right. I mean, the way the daily's looking right now, it looks like it wants to go test the highs as it stands right now. I mean, that's just my opinion. It's already testing in and around the upper first. It's likely, it's already hitting some of my targets that I pointed out, I think last week to the upside here. So if it gets above the upper first, we're looking 44K is the next big area. So it's already tagged the upper first at 43.6 and slightly above to 43.8, I believe. Right? What did it get to just now? Just shy of 43.8, $24 shy. $23.01 shy. And I'd be looking 44. If it gets above 44, we're looking 44.5 to the high, at 45 to the monthly at 45.5 above there. We just talked about a lot about those areas above that are in the 47,000 to that 48,240 swing high area. Look at Sol. Yeah, we don't really have too much else to look at. It's not really worth looking at. We can always just follow up on Wednesday with Dixie, gold, and traditional markets. We do have, traditional markets being closed today. I'm not really interested in it until they open back up officially. We're going to see the same for gold. You're going to see Dixie also looking very similar. It is trading, but very minimal it hit, our downside areas on the wicks, but we already talked about this on, Thursday into Friday. So we already discussed those. So we can just kind of have a Happy New Year conversation and focus on Bitcoin. I don't want to get into a ton of altcoins, but there might be a few that I can look at. Okay. I see what Spin is talking about there. I mean, Spin, it was a good trade. I don't know if you're accumulating or trading, but, so far it would be a good trade that you're in. So, yes. I think before getting into altcoins, I want to know from you guys what it is that you might have questions about as it relates to some of our analysis here. So things that you're unclear on that you'd like explained. What is it that that you might have questions about that I could elaborate on while we have some time? Yeah, let's go ahead and actually, a good point. Let's throw on, because there is a few, about 20 to 30 seconds lag time. Let's go ahead and turn on the beats in the background. We'll just keep it in a little bit of a lower level here. We'll go ahead and, yeah, good call. Cool. So I'm kidding. I have a request you need to start showing your face. You'll get a lot more subscribers. I'm not really looking for subscribers. I mean, whoever subscribes, they subscribe because they understand trading at this point, or are just beginning to learn trading and find my analysis intriguing. Only once they find it intriguing and start watching will they begin to understand how this analysis is performed and understand the power behind it and the reason why we are so accurate here in terms of our levels, calls on closes and wicks. We've been calling this market for a long time as a group. I myself have been leading that group and teaching many of you how I trade and how things are done, a little peer into the industry, at least for my time in it. And everybody's got their own style there too, but we've been incredibly accurate, and this is the methodology that I use to derive that accuracy. All right, so I've got, so I will look at Sol and TRB and a few others that you guys are requesting, but I would say just save it for the end, because I want to kind of go through, answer some questions first. So, expenses trading spot, scalp conditions for entry on lower term time frames, in trend, counter trend, talking 4-hour time frame and lower. So Bobby has a, Bobby might not want to say this out loud, but I'll blow up your spot a bit here. Bobby is an incredibly talented trader, so he actually knows the answer to this, but he is coming up with good questions for me to answer, because he's giving me he's feeding me some bait here, because he generally knows what I'm going to say, and he is incredibly skilled at this himself. So let's go ahead and use a naked chart as he suggested. I do like my Bollinger Bands, so getting rid of them is going to make me a little sad. But I will keep the swing chart on here, because I think it illustrates kind of a lot of what my point is typically when looking at swing highs and swing lows. I mean, we can just look at the local structure here. So first high was put in, back here. You could tell that it was a high. Why? Because we have a 3-candle structure here. Now, technically, it's not really a high on this particular impulse until we see more candles. If it was going to be a 3-candle high, this red candle here from the 5th would have dropped this open down here around this prior high. Now, in this case, this was a swing high to a swing low to a swing higher, lower high to swing lower low. So realistically, once more candles painted here, you know, we got a consolidation basically, unless it dropped this candle here at around 42,300. Back here, we're not really looking lower. We're looking for things to go sideways within that range, you know, and it's right around a support level, you know, or what would be considered a retest of support. Now you can see to the right what ended up happening, but here we had, you know, a bit of a no closing swing low. We did get now, however, a move up and then a move down here. So we had a sideways move to a green candle, red candle, and then a red candle that dropped this prior green candle. So there's your 3 candle close open with a lower swing high to set a lower low within the context of this this candle, this bar right here from the 5th rather of 2023 in December. Said that all wrong. Now it went sideways. It did not put in a swing low, right? Because it would immediately just put in a swing high. So the only way to get a swing low and a close would be to take out the open that put in the swing high. And in this case, that would have been around you know, 43.9. So instead we wait. It comes down, makes a little bit of a, well, it actually made a little bit of a lower high on a close here, but it did not really break down from this structure here, this close open structure here. And then this 3 candles, we had the red candle that then takes out the close open of this lower high in here, because this open on the low down here did get closed below, and it closed basically right on the close open of the prior lower high. And then we get a green candle that takes out that close open and the wicks. So there's your low set on a close. And then the next big area to be looking for would be this guy right here. You see that the next candle did reject from that area, and that was around that 43.9 to 44K. Rejected on this candle because that was the most recent close open that was above this close open that was just closed above. So you got to kind of take it step by step. I know that sounds a little convoluted, but basically you're looking at swing high gets set, things go sideways, we get a 3 candle close open lower high, then a consolidation, 3 candle close open lower high that closes right on and around the close opens of the prior close open lower high. We get a candle that then takes out this close open lower high and the wick high there, which was a bit of a mini swing on lower term time frames, not the 4-hour, but the lower term time frames. We then look to the next big area, which is the low side of these candles, which it did wick into in this candle, right? Wicked into, and the low side of all of these candles in the consolidation. Above there, we then target the high side of closes of the candles to the wicks, if you like. And we did see that area get spiked at the high side, right at that open at 43 to 44K. We saw that rejected. Next candle then closes inside of it and starts to regain some ground here and close right on the close open of this candle structure here. Next candle closes above it and above the close open highs over here. So we have higher highs on a close open basis. And we did have bearish divergence building in here. I could tell you that just by looking at the swing chart here and the candles themselves. But then we get a swing lower high. We get a closing higher high, bearish divergence there. We get a little bit of a consolidation, and then we get a dump off down to, well, the areas that we were just pointing at before. Initial dump off, wicked right in and through this consolidation before the move up, and then move down into another 3 candle low that was avoided being set. It did get set on the 4th candle here with this guy here, but then rejected, came back down to the lows, did not pass them, held it, moved up, so on and so forth, goes into a sideways consolidation. So basically what I'm trying to tell you here is that when you're looking at close opens, they are going to be very different than your swing highs and swing lows. A lot of people look at trend as the swing high and swing low. I don't really like doing that, because if you have a swing high that cannot be breached, that you need the closes to get above or below those swing highs and lows in order to get continuation. So when you're looking at swing highs and swing lows, you can really start to define, a consolidation versus a breakout, and you need the closes to support that. So in this case, this right here, this red candle from yesterday, the 31st, we had the red candle down. We had an inverted hammer, doji, whatever you want to call it. And then we had the next candle. A lot of indicators will call this a low, right? So we had a swing low to swing high to swing low. But a lot of indicators, like your RSI indicators, are going to call this guy right here on this third candle that closes above, because you have the close open here and it closes above the close of the prior candle. When it does that, you're going to get a lot of indicators calling this the low right here. And in fact, we can mark this. Let's turn off the swing indicator just for a moment. And we can mark this, and we can look at an RSI indicator. Excuse me. My stomach is just going crazy. That was a loud grumble. I'm trying not to burp directly into the microphone. Excuse me. My apologies. No, it did call the swing low, the low there, right? Once this candle was taken into account, so it calls this low because this is the low structure here. This close open, so it's the close right there. So this candle, once this candle that I have marked was closed above, it marks this as the low. But it's not until we see this close open right here, which would be the open of the low at 42,590. Once this gets closed above, that's my criteria, and then it still needs to take out the next swing. And you can see how this works. So my criteria is that we have the closing low isn't set until the fourth candle here, so it's not a 3-candle low. You will get a lot of indicators would have already called this a 3-candle low. It's not until this fourth candle. So we got the bear candle followed by 3 bull candles. This is now a close open low in my way of looking at these. And then we need to look for the most recent swing high that put in an actual downtrend to get breached, and that was this guy right here. And it just so happens that this was the breakout area. Okay, so when you look at this, we see that we had the low solidified on a close. So the next area to look for to get hit is this swing high of this move down. So that was at 42,850. Once that area is breached, we do have some resistance from this close open high right here with a swing high above it. But realistically, we're looking at the most recent price action. Also, there's a bit of price compression. We had mean reversion to an uptrend that was compressing the Bollinger Bands. I can look at this and I can see price compression. So there's expansion to the downside and then compression back up, and then this is mean reversion back to the highs. So that's the look that it would get on compression and expansion if we were to turn the Bollinger Bands back on. But in this case, once we saw this swing high get broken above, we already had the low confirmed. Then we're looking for a move up. This likely came on a bunch of divergences. Yes, because it was all lower lows, and we were getting higher highs on RSI. And then we look at BBWP. We were going into compression to expansion. So compressing on the way down, and then expansion, which is mean reverting back to the highs on higher term timeframes. So in this case, we're getting expansion on the 4-hour to the upside, which is mean reversion on many of the time frames, many of the higher term time frames above it, to the basis and upper first area. So in this case, understanding how lows and highs are set on a closing basis versus how swing highs and swing lows are determined is something that takes a bit of skill. I mean, it's a lot clearer over here. I mean, you can see this was a closing low with a swing low. This was a closing high with it. This is easy as hell. I mean, once we get down here, we have the lowest low of the candle, but the candle before it, once this is breached, low is set on a close. So we put in a lot of candles before it was set. We had the 3 candle, but this 3 candle only closed above this. You're going to get the low set here on a lot of indicators, but it's not until this candle right here gets closed above, and that was at 42,671. We see the candle that breaches it with authority and goes where? Closes right on this prior support resistance area. This was a support at the time that led to a lower high that led to this low. So once this low is set, we get a move right into this prior higher low, or lower, or this prior low. It's not a higher low. This was technically a higher low, but from the consolidation, it was a lower low. So there's a whole, you can look at it in many different ways. But in this case, we get this green candle that sets this as a low, comes in and closes right on this guy, goes sideways, and then breaches it. It swings. So you look to the next support resistance area, right? You look at the bottom side of these candles, they all get wicked. The high got ran and then down. So, you know, easy 3 candle over here, not a consolidation low like this guy. Easy 3 candle, up candle, doji, down candle that takes out the open of the up candle. That's a clear, easy to read 3 candle closing high. That then gives us the bias that things are going to come down and minimum test the high side of the lows to the actual lows themselves. You see this happen over here. If this closing low is dropped, then we're looking to the wick low into supports down below, which is, you know, areas over here to the left, right? Well, if that holds up, we're looking for easy 3 candle highs. This was easy 3 candle low. This low right here was a pretty easy one because the candles were shrinking on the bottom, so we were getting price compression and inside bars inside this low that could not close below this low over here at 41.6. Got a nice spike down there to that 41.3, but we just saw it kind of come down. Then we saw this 3 candle right here. This is a beautiful 3 candle low. So we got the open here. Once this open is taken out, which it was taken out 2 candles later by this big green candle, then we're looking to this low side structure and this low side structure on the closes, and go figure that's what we get, a failed 3 candle high, but we do get a swing high here that then turns into what? A 3 candle low. So we get a failed 3 candle high, but it is a swing high, right? We get the swing lows down here to the swing high up here. We get the pullback, but unless it breached this low at 41.8 or 41.9, this is not, I repeat, this is not a 3 candle closing high. We just had the low set, the candle that closed up here, set that low. We did not get any kind of a reversal off of that closed back below the low that was just set on a close, again on a close, but did put in a swing high to a swing low, but we did get a higher low off of this. We got the red candle, green candle, green candle. The green candle closed above the red candle, so we get a closing higher low, and we are looking for this to then create at minimum a new swing high. It did. Comes down into another higher low that took 4 candles. We just explained that one, and then we're looking back to the swing high. From there, we're looking to the close opens, next swing high to these lows, next swing highs, and step it up, step it up, step it up. Now we're looking into this big consolidation up here. This is going to be a big area of resistance once this has gotten through, and guess where? It's going to start breaching through that. Oh wait, that's $44,000. We spoke about this one earlier. So very, very cool. Then if we do manage to breach the swing high at 43,830, we're looking to 44. The closes up here above there, we're looking to 44.5, 45, 45.5, 47, 48,240, 48.5, and beyond. If it does put in a high here, it would be a closing higher high, and the bias would be that as long as it's closing above this close open at 42,300 or so to the wick low at 42K, we're looking for higher lows. Hi Jedi, I know you got a lot going on, buddy. Please take care of yourself. Much love, and I wish family the best. I hope everything goes okay. So yeah, that is naked chart theory. Just throw on the bands. You can see the compression to expansion. as price really ground to a halt. First of all, we saw compression to big expansion and continuation, rejections at the upper first, maintaining that downtrend with those lower highs, keep rejecting that upper first, keep going in and testing around that lower second and third, regains, rejects the upper first, finds support on the lower first. Now we start to have a trend shift in the bands as well. Nice compression to re-expansion to the upside. Now we've got a new trend going on with not just price, but the bands as well, as things have shifted around. Yeah, I think you can clip my videos. I'm not quite sure. Maybe I could clip it. It's a little wordy. If people are just dropping in it blind, they may not understand what's going on. But hopefully this helps you and helps others that are kind of looking at this in the same manner. But it's all confluent with everything that we just talked about, right? Everything that I just talked about is confluent with all the levels and all the analysis that we just did earlier on Bitcoin. And that's why technical analysis is beautiful. Also, this price action is beautiful. Go for that 44K. All right. Let's go ahead and take a look at Sol for you. We'll do just a few here. TRB. Are you trading TRB, Bobby, and others? Yeah, Bobby. I think you know what you're doing. But yeah, it always helps to hear it again. But yeah, Sol is headed right back to the areas that we talked about last week. We're looking at above the upper first at 109. It's 110. It's 109.98. So above 110, we're looking for 115 to get ran. This was a little rejection over here. Likely to see the low set. It will set a technical low on any close above 107. It's 106.99. It's this guy right here. Above there, we're looking for the target that we're seeing right now, and then the swing right here. So we've got a zone, 109.97, which is the upper first. Got the close to that last swing high of this little consolidation low. Consolidation low on the 3 candle is going to be right here. So technically, you do have even more leeway. It's 106.16. I just noticed. I thought they were all, my eyes were blending this initial down candle that set the swing low. But no, there is a lower, a little bit of a lower open down here. So this will set this, plus it's got a little bit of a Morningstar reversal candle in the middle there. No, it's already hitting its first upside target at about 110. If it can pass 110, we're looking at 115. Past there, we're looking at 120 to the upper second, which is right around the highs at 125, 126 area. And I would be eventually looking up to about 140 to 150. If it does drop the basis, which is now coming in line with this $93 support level, then I would be looking back to this zone of consolidation by the lower first, which is coming in at around 75 to 80 bucks. So keep that in mind. This is all based on getting above the upper first, setting the low here, going in and reclaiming 115 to go and test the highs and higher around the 125 to 126. If it breaches that, we're looking at 140, 150. If it does break down below 93, then we're looking back to around 75 to 80 bucks initially, and then we come back to it later. It could even just swing this whole area down to 70. But that's a bridge we can cross if and when it were to happen. All right, so let me look here. We'll look at TRB if you wanted to see it. Or no. spent... Oh, nah, hell no. Yeah, you definitely are trading it then, huh? Maybe not after its big run-up, I hope, if you were trading it. TRB's way too G-Gen to trade for you? Come on, even I traded it. XRP. Oh, we've got an army member here. Hello, Commander. Hey, it's all good, Cheryl. I'm more than willing to look at the coins and follow up with coins that we've been tracking for a while. We can look at XRP. We can look at TRB. We can look at something else. And then kind of go from there. There has been a lot of coins popping up left and right. So I do want to highlight this for next time, provided you know, it doesn't just break out while I'm highlighting it, so that we can observe what we just talked about here. We'll mark this in a different color to note that it's not part of our overall higher time frame analysis for Sol here. So this is going to be the big one. Above 110, 115, 120 is going to be in the cards. If I can get above 125, 126, looking 140, 150. That's pretty much in line with what I've been looking for on it anyway. One last thing I will look at here. Above 110, you will get a momentum shift on the daily. Not you, but Sol. You are not Sol, but you probably have a very good Sol. All right, so let's take a look. One at a time, Ivan. Only one. Everyone gets one. TRB. By the way, Ivan, I only just now saw that you messaged me. What I'm referring to with the simple stuff is trading and technical analysis is simple once you understand the basics, is what I'm referring to. Everything we're doing is pretty complex analysis if you don't have a good base. So you need to understand the basics, and everything's simple once you understand the basics. There's 4 simple things to understand, and that is trend. Trend is your friend until the end of the trend. When there is no trend, or when the trend is unclear, everyone's in fear. Support and resistance, and volatility. These are all equal. Support and resistance and volatility are not on equal footing, but we've got trend and support and resistance are kind of the main things that you need to pay attention to. Volatility then is the next biggest piece. So there is kind of a hierarchy there. And then momentum is derived from that. So let's go ahead and look at TRB just for shits and giggles, because I think it might be worth at least taking a look to see where it is, because I have traded this. Oh dear. Well, that's a little bit of a spike up to $618, and then a nice move back down to the lower first at 123. Don't want to be the person. Yeah, I'm glad I got out when I was trading this. I mean, you can get in. You're still in higher low territory. I might fill out this wick a little bit. I don't think it's going to fully collapse. So 575 as the momentum pivot is pretty far away at this point. Weekly is headed down below 350, so good luck. This is the weekly upper first area. It could come all the way back to 84 bucks at this low. As long as it holds it, it's fine. There's a zone down here. As long as this is a big move, obviously. It's absolutely wrecking people, but it's still a big uptrend. 73 to 81 bucks, and it's still safe on the weekly. That's a freaking massive drawdown. It's also the lower second standard deviation on the daily, so hey, what do you know? Honestly, you don't want to see this local area dropped on the daily, though, and that would be this 109 to 103 area. Above there, and especially above the lower first, it's probably just going to keep going up and to the right, maybe consolidate a little bit, maybe screw around, start a little bit of a downtrend into support areas, and then come back to it. It definitely wrecked a lot of people, that's for sure. I took the expansion up a while ago, so it wasn't even part of this move. I think it might have been into some of the price action that was here. So, yeah. Oh man, what a mess it is for whoever's buying up there at the top. The bigger guys definitely found their exit liquidity, that's for sure. Yeah. What it did on the yeah, it did the same exact thing on Femex. It's only listed, you know, in December, so, or no, this listed in November rather, and in December is when it really started to get rolling rather. Yeah. Glad I avoided that mess. How fast did it happen? Let's look. It took a little while to actually really, it gave you warning signs. Once this was dropped, it was, you know, especially this order block right here and little consolidation. It was like, hey man, you're looking for a big freaking drawdown. Yeah, so it did give warning. It wasn't like single candle, like minute candle down kind of thing. Bitcoin doing Bitcoin things. Let's go ahead and look back here. Oh my God, CTSI. I haven't heard that in a long time. Jeez. You second Filecoin. Oh God. All right, so we'll look at XRP. We will satisfy our resident army member. Just kidding, by the way. I also trade XRP. I owned a lot of it too from a very long time ago. I offloaded a lot last bull market. And I may or may not have picked up some bags of this, as you can tell by some of our prior analysis. If you've been around for a little while, we've even got a way to look at consolidation here. Again, this is a freaking mess. Let's go ahead and get rid of all this crap, and we'll redo this. We'll redo this chart a bit. So we had the very big move up here, and then move back down to support and consolidation. And this is just painting, you know, a sideways and up picture as it stands right now since the lows. This massive move up to nearly $1, you know, back in July into August. Again, this is at around the same time that we were starting to see Bitcoin hit some really good consolidation areas and spike up into some overhead resistances before really moving on. This is a larger form consolidation. This is compression. One of the things that I will warn you about is above the upper second, you're looking good, but you're looking good to that 65 to 69 cent swing high area. Upper second is at 64.16. This is a compression. We could be looking at a 3-candle low being set here today. If that is the case, then we're looking to the upper first right here at 63 to that upper second around 65. If we do get that 69 cent, 65 to 69 cent breached on the swings, pay attention to 67 to 70 cents, and then on up to 71 to around that 75 cent region. So the daily could start to get expansion, but you do want to be careful because you want to see follow through on the weekly. In this case, daily is pointed down and any closes below 64, about 64.25 cents. It is, you know, looking as though it could go sideways for a little while. If it does drop the lows, you want to be careful that this doesn't redistribute. Okay, now there's, from the daily perspective, dropping the lower second, that's at 60 cents. You just got to pay attention to the lows. As long as they're holding up and it just gets expansion into those lows at around 57 to 58 cents, then it's looking good. You can just step it down to around that 55 to 53, and possibly the lows down there at 48 to 50 in this consolidation. And that would be a good support zone to be looking at. But, you know, I don't really have an opinion right now, other than it's, you know, looking okay on the weekly. Lots of bearish divergences probably building up from this, though. Weekly will turn up on any close this week above around 62.5 cents. So 62.6 cents. We'll see momentum turn back to the upside. Need to see a 3-candle low set. Now, in this case, wouldn't be taking, I'd be taking, yeah, this is a consolidation. It needs to take out 66 to 67 cents on the weekly. Go test that upper second at 69, and then take out that 75-cent high. Again, that 75-cent high, by the way, is right there at that July closing high area. So if that is taken out, then I'd be looking somewhere around 90 cents to $1 to get tagged, or at least the next weekly swing high to get tagged. Below there, you're looking, 48 to 50 cents again by the lower first on the weekly, possibly that lower second, which is at 45 cents. As long as it's above 45 cents, 44 to 45 cents, it's looking good for a sideways and up consolidation to possible continuation. Cheryl, I don't know if it's on Coinbase. I mean, we can look at Filecoin. I don't know what the hotness is with this lately, but, I can tell you Filecoin, the Filecoin chart is an absolute travesty. It's a crime. It's a damn crime. Now, to be fair, it's found its lows, right? Unfortunately, its lows are at around $2.50 to $3. Remember, its highs were at 90. If it can get above and close above around 840 to 850 this month, then we're looking at expansion. But you need to be careful of this structure over here on the monthly, which is coming in at around 10 to 11 bucks. So we're looking at 977 to 1070, so 10 to 11 bucks. Above there, it's looking for expansion. It's basically, it's got to get above this. It would be above this high, be above this high. Then we're looking for the next low side structure at around 16 to 20 bucks. Above there, you're looking to around 29 to 30. And then you're looking 40 to 50. And then all-time high area, 80 to 90 bucks above there. If it does drop the basis around $5, you're looking right back to the $2, $3 region. I don't really have too much else to say about Filecoin. Ivan says it would be possible for you to explain what each coin does. No, absolutely not. I don't care about what each coin does when I'm trading it. There's coins that the coins that I care about are going to be the ones that I talk about that I understand the functionality of. Most of the coins in the crypto space are garbage and have no real functionality. They are just, they are pumped with liquidity from founders and angel investors and stuff like that. And it's where they get their initial value from, and then the market takes it from there. And they usually, 99% of them don't even deliver on what their white papers goals are, what the project goals are. So no, I'm not the person to go to for that kind of stuff at all. And there's plenty of places to research where you have where you can look into a project and what it's doing, and then typically you have to go project by project and research what the project is. Not get absorbed into their hype about their own project, but that's what you have to go do, is at least figure out what they are trying to accomplish with that project, and then you decide whether or not your money is worth investing into that project. If you want to invest in the project, if you're just trading, I don't care what it is. I look at the chart. I don't care what the coin is. I look at the chart, I go to the exchange, and if the chart's got a setup that I like, I trade it. That's it. I don't care what the coin does. I don't care if it lives or dies. I don't care anything about it. ADA did have a good spike. We'll look at that. It is not, no. So you gotta, okay, so I see some of the other guys already saying this to you. What I basically just said. It's a lot of, you have to learn to do your own research, right? Anything that you are looking to invest in, you have to look into yourself. Either go right to the horse's mouth and you research the project via their own information that they put out there, or you go to others that have done that research, but you need to know who those people are that are doing that research, and you need to trust that they're doing that research of their own volition because they are interested in the project and not being paid to shill it, which in most cases that is not the case. Most are paid to shill projects. In fact, most all of crypto Twitter or crypto X or YouTube are paid shills, which is one of the reasons why I don't have any sponsors and I'm not promoting any coins except Bitcoin. I think that everyone should own some Bitcoin. So if you want to know a project that I know a lot about, you pick Bitcoin, and obviously there are a few others, but those are the ones that I actually believe in terms of the project. There are some altcoins that I like, but I've done a lot of research in them, and I myself, and then determined that I wanted to buy them, and I've also determined when those projects have not gone the right way to sell them. But I also pay attention to the technicals. If the technicals don't line up with what they're saying, then there is a discrepancy, and then I will usually exit if there is a discrepancy. If there's not, then great, I'll hold on to it for the long term. But you have to learn to do that research. It's not, you can't put that on anyone else. No one else can invest your money for you. So no, it is not something that I'm going to be doing ever here. This is about technical analysis, reading charts, evaluating setups, seeing where the likely areas of interest are to the upside and downside, and learning how to trade those. I mean, it's not difficult to trade them. Now, I'm not diving into the actual mechanics of trading with you guys. That's not really what I'm here for. You have to find your style. You know, some people can scalp and sit there at the computer all day and scalp highs and lows. And oh boy, Bobby, you're gonna bait me into a conversation about ordinals. All right, look, hype mainly, spam mostly. Most ordinals are just spam. Look, I have pretty strong opinions about this, but I also allow, when I'm mining, I will mine with inscription templates. So, you know, I am processing ordinal transactions. But it's most of it's spam, and it's organized spam. Look, and this is something that I know you were tracking the conversation between myself and Torque, but the big thing, just to kind of recap, is I am a firm believer, and I've been on Bitcoin Talk for a long time. I'm not going to tell you my name on there, so you can probably figure out who I am if you go read Bitcoin Talk and the forums there. You could probably figure out, based on listening to me for a very long time, Bobby, who I am there. But the main thing that you got to understand about my view of this is that I believe since about 2014, maybe even earlier, 2015, 2016, a lot of the devs that have joined the, volunteered to work on Bitcoin are adversarial developers. Look, and a lot of the developers that are pushing ordinals and stuff like that, you got to remember, a lot of these guys are the same guys that forked off to BSV and Bcash and like all the rest. Like they do not believe in Bitcoin in the way it is right now, and utilizing ordinals as an attack vector. And the counterpoint to that is like, oh well, why are we okay with all these other protocols? Well, because they weren't being used as a direct attack vector in the way that this is, and filling up block space with spam in many cases. You can see it. It's blatant. Like those that say that no, it's not, it's all functional. Bullshit. It's all, you're just filling it up with spam to make a point. So they have an agenda that they want to change the protocol. But what you, at its base core, at the core of Bitcoin and Bitcoin Core are the templates, and templates are literally a mechanism of censorship. So for people that want to say, like, when we're talking censorship resistant, we're talking about censorship resistant transaction of monetary value. And they're trying to twist the conversation into being, well, all these other things are monetary value. No, Bitcoin is the monetary value. And as long as that is free to go, and that's what it's, everything that's being censored is censored so that you can transmit the transactions for the monetary value of Bitcoin itself. And the everything that's being argued about is to sidetrack right now. And templates that from Bitcoin's inception, mining templates are censorship. They are meant to define the transactions on the Bitcoin network of Bitcoin. So that is literally, it is censorship. And Bitcoin is not censorship free. It is censorship resistant, and it's censorship resistant in monetary transfer. And now they're, oh no, it's not. Look at the fees; they're so high. Well, because they're flooding block space with spam. That's really what it is. Now, do I allow it on my nodes? Yes. I make money. I make money. I make money on fees. I make money. So. Bye, Cheryl. Take care. So, you know, it's all about the templates, and a lot is being made of Luke Deshar, or whatever his name is. Look, I'm not a fan of any of these people. You know, you got the Udis, you got the Lukes, you've got, you know, one side versus you got the Wizards. I don't care. It's not that I'm not a fanboy. I don't need to be a fanboy of anyone, and you shouldn't be. The protocol is open to everyone. If you want to be a developer, you can go be a developer. If I wanted to be a developer, I could. But it's not something that I'm interested in. I don't like or dislike anyone in those conversations. I have strong feelings about adversarial developers, and I know who I think they are. Does that make them bad people? Absolutely not. No, it's simply a different set of ideas and ideals. So, in my opinion, what I'm here for is to secure Bitcoin itself. Everything outside of that doesn't really matter to me, because at some point, my take on Bitcoin and where I think things are headed is that Bitcoin will be the representation of the output, the energy output of society. And I've explained this before. If Bitcoin is the energy output of society, that means all of the energy output that a society produces, that Bitcoin will be the base layer of that. Why? Because it's immutable and it's auditable. So when we're talking about the energy output of a society, it can happen in many different ways. Right now, you're seeing the revolution happen in the electricity business and electrical, right? And that's where it should be. And you'll see it in defense and protecting networks. That will raise the cost. Now we're going into something that someone you know very well, Jason P. Lowry, got into. Now, remember, Jason P. Lowry did not invent the idea. He had revelations and expansions upon ideas that were already presented, and utilization of the technology of the network to impose a high cost on anyone that would attack a network protected by Bitcoin. And he's not just talking your WAN services, which, yes, we're talking WAN services, electrical services, gateway devices on those WANs, on those local area networks and wide area networks, switches. I'm talking about gateways. There's a million different vendors for gateways, and imposing a cost on someone to open or close or transact through those ports is something that will become commonplace. That is network defense. So if you try to aggregate and flood a network to bring it down, DDoS it, which I'm not going to get too much into the technicals of that stuff. For those of you that know, I used to actually teach cyber defense and cybersecurity as well as ethical hacking. But this kind of stuff will happen. Bitcoin will become this. Will have this use case, and this is all far beyond monetary, but it all has value, right? Energy has value. It has monetary value. That's why, what backs the US dollar right now? Well, it's the US taxpayer and the war machine. That's what backs the US dollar. And it's it's backing in relation to its inflated amount of dollars out there is way out of skew and unsustainable, right? But what is it truly backed by? Well, at the end of the day, it's backed by human lives. It's backed by the American people's human lives. Our society's energy output of our humanity, which is our tax dollars and our lives at the end of the day. And of course, you can wrap up oil and like all these other things. It's not really backed by nothing. It's backed by something that they keep devaluing. It's rehypothecating over and over and over again. As the rehypothecating, you can think of it that way if you're familiar with the term. Rehypothecation of funds on like FTX. They rehypothecated it by taking all the customer funds and giving it to Alameda to play with and lose trading, because they all suck at trading and reading charts. And they had altruistic ideas about society and how much money they were going to make and what they were going to do and who they were going to pay off and bribe and all that shit. But the fact of the matter is that at the end of the day, money is energy output, right? And those that think that Bitcoin will never become money just think that we will cease having any type of energy output, because Bitcoin will become the base layer for energy output. That's my view. That's where I think things are headed. And I don't think that any of these little squabbles in between matter at all. I don't think that people who think that Bitcoin is censorship free, I think they're crazy and they never read the white paper. Okay, it was never meant to be censorship free. It was meant to be a censorship network. It was literally purpose built to be a censorship network with specific goals. Those goals being immutability and transparency. And that's what we got. And if you don't protect that, then it's no longer Bitcoin. Fork it off and go fuck yourself. And that's really where I'm at with it. And I don't care. You could do ordinals. I'm going to make money on it. And I'll change templates around when I feel like it's going away. But they're flooding the network with it. I might as well make money on it, right? Why not? Go ahead. Clog it up. Have people complaining about fees. Make your point. I don't really care what your point is. As long as it's going to be beneficial from the prospect of you have to use Bitcoin either way. So it's being used, and then it's being used for whatever your purpose is. Spam, it's going to cost you a lot more money, and the money's only going to be more expensive to keep spamming ordinals. But then there will be a cash out. And when that cash out happens, things free up. It's going to be a self-balancing thing. I don't really have an opinion as to whether or not ordinals are good or bad. I'm really interested in BitVM. I think that BitVM is something that is not talked about enough. I think people only focus on ordinals because the conversation originally started back when Taproot was introduced and adopted. And that conversation was around censorship. And the reason why ordinals became what they are is because of the templates disallowing it. And disallowing the inscriptions and or only allowing specific types of inscriptions. And that's where people really just don't, they're making a mountain out of a molehill, and really drove this into the spotlight to make it what it is. So those that cried the loudest about being censored did it with the purpose of blowing it up into the rest of the community and the crypto community at large, and even some normies now trying to ask about it. I got asked about ordinals over the holidays, which is crazy. Like, how the hell do you even know what ordinals and inscriptions are? I don't know. I keep hearing about it. Like, okay, I guess I have to explain this. Now, look, I'm not here to explain ordinals and inscriptions and mining and how all of this stuff works. That is something that is a topic far afield. It would take hours and hours and hours for me to really get into it, get you a base level of understanding. But if you want just my opinion, I have no problem with it. I think the people crying about it are being silly. I think the people crying that they don't have enough and they want more are also silly. A lot of the spam is being very it's being pushed by those BSVs and BSC whales, and even some developers, former developers, to really make a point to try to change the protocol. They want to increase the cap of Bitcoin. That's not going to happen, but that's what they want to do, and they want to push out pools that want to, your Ocean protocol, and they want to call Luke and Jack and everybody associated. They're all fascist censors and blah blah blah. It's like, shut up. All you guys are just fighting a war within a larger war that's doing nothing but serving its purpose to gather more publicity for the projects that you are pushing. Is there going to be real implementations brought out of this? This is like the same. I love the argument. Well, this is another one that's come up alongside a lot of this, because it's all the same people just mixing their arguments together when it comes to ordinals and templates and mining and who's doing this. And then there's BlackRock, and they're going to own all the Bitcoin, man. It's all going to be custodied at Coinbase, and Coinbase could just dump it all, man. Fucking idiots. No, they can't. It's custody. It's going to be tagged to actual shares, which means that if you let go of the underlying asset and dump it while the shares are still out there, meaning they're not being redeemed, then guess what? Well, you are now lapsed in your fiduciary responsibility as a custodian. You'll be sued into the depths of hell by those same players who are making money on management fees. Your BlackRocks, your Fidelities, your ARCs, your whoever else. Right? Your wisdom trees, and so just go down the list. They're making money on AUM. It's assets under management, the key word being management. They don't own all of those assets. It's not BlackRock, it's not ARC, it's individual investors, it's funds, it's 401ks, it's IRAs, and the people who think that, like, oh my God, they're just going to dump it all, man. Coinbase is just, they're aggregating it all, and they're just going to dump on everybody, man, and it's just going to go to zero. That's how they're going to get rid of it, and then the CBDCs are going to come, and they're going to eat our children right in front of us, and like, shut the fuck up, man. These people have no idea what they're talking about. They're fear-mongering, and they're showing their lack of understanding of how Bitcoin even works. They're showing their lack of understanding of how ETFs and how anything in the custody side of things works. They're also showing their lack of understanding of how much money it would take for that to actually happen, in terms of, like, well, they'll just change the network. They're going to change the network just by holding Bitcoin? No, you can't. Unless they're going to use that network, unless they're going to use custody Bitcoin, which they can't because it's going to be custodied. It has to sit still. They cannot go in and change any of the mining. Oh, they'll just 51% attack it. Well, then I could see if it was only one ETF and all of the Bitcoin was being aggregated by one custodian and one ETF. Then guess what? You've now got a massive problem, because if they do something from the governmental side of things to then take control of that ETF and the custodian, that's where government or nation state gets into play. So one of the things is it's really in vogue to hate on Gary, but a lot of people forget that Gary Gensler, not only does he fundamentally understands Bitcoin, And one of the smartest things that he's actually doing, and you're never going to hear me really talk good about Gary Gensler since he's been in the SEC chair, because it's fun to shit on him. It really is. But quite frankly, what he's doing is logical. He is making sure that they have all their ducks in a row, and he wants them all to get approved at the same time. Why? Because if you can split up the approval and the ETFs and the custody shares of each ETF across many different companies at the same time, meaning more and more and more, you get larger decentralization of this. You get a much bigger barrier for the government should they want to come in and seize control. Now they've got to fight the biggest companies, not just one. They've got to fight the biggest companies on the planet for it. The other thing that's actually pretty smart about this is cash creates, but I don't really want to get into it. Everybody thinks that I will get into cash creates when the ETFs launch. Cash create, cash redemption are very different. That does mean on the back end, they're not exchanging the Bitcoin. If you're going to go in and you're going to redeem, you're not going to get that Bitcoin. Yes, they will have mechanisms for institutions who want to redeem their ETF for Bitcoin to receive Bitcoin. This is one of the biggest fallacies I've seen around there. But basically, on the back end, if I was just going to renew it through redeem shares through my broker right now, and there's an ETF and it's a cash create, I'm going to get cash back, not Bitcoin. I'm not going to get that Bitcoin. It actually would be much harder because they can't deliver me Bitcoin, custodied Bitcoin, without jumping through a bunch of hoops, because what they'd be doing is transferring Bitcoin and then exchanging that out into fiat so that I could get that and then go and buy Bitcoin if I wanted to go buy Bitcoin. Now it's actually much easier because they'll just redeem back into cash, and I can say to my broker, hey, I want that redeemed cash to just come back to me as Bitcoin, and they will do it themselves instead of having the ETF do it. So it benefits them because they get another little management fee, but then they can make sure that you get delivered the amount of Bitcoin that you are supposed to get without devaluing along that line of transfer to you. So you immediately can transfer that fiat over into the Bitcoin. Most all of the brokers now have custody locally. They can give you your own wallet. You can even have hot wallets on many of your phone accounts for all the different providers. You've got Robinhood is doing it. There's Fidelity already has a cold wallet there, or I'm sorry, it is a hot wallet that it just goes into an account, a hot wallet that's attached to your main brokerage account. So this is all stuff that I will discuss way more in depth, but when it comes to the whole ordinals, inscriptions, templates, and mining argument, and how that's now being linked, what they're doing is they're pulling the conversation towards the whole BlackRock thing and Coinbase and this person and that, and they're gonna screw us all. We're all basically, Bitcoin's gonna be fully controlled and we're all gonna die. Like, I don't know how they leaped to the last one, but I mean, I don't think it's gonna be BlackRock and Bitcoin that would be the ones that cause us all to do that, but maybe they might play a role because they are in the defense industry, but that's a totally different conversation. So yeah, Bitcoin, man, buy some. Not financial advice. Do your own research. Go ahead and hit the like and subscribe if you enjoyed that little Landy rant there. Might be worth revisiting at some point in the future as well if you want to clip that one. Yes, you did bait me, sir. Don, damn, didn't know they'd come to eat children. Yes, Ivan, I'm glad you enjoy a good Landy rant here. And yes, I agree with you, Spin. The War Machine is the devil. Oh, yes. Look, I have a lot of unique insight into these issues. I won't get into how or why, but you can go and do your own research, and you can also come to some of these same conclusions. And it is something that the world right now that we live in, the society in general feeds off of conflict, right? And this is pretty generally pretty normal. It's human nature, right, to feed off of this conflict, whether or not it's competition or outright conflict, adversarial conflict. We'd prefer that everything be competition and fair at that, but generally, society is kind of hitting an inflection point over the past, however many years. It seems to have ticked up in the past 2 years, but this inflection point where conflict is everything. Everything must be viewed through the lens of conflict. And this is being borne out in every aspect and every interaction that you see. This is exacerbated by the media, and then, of course, by social media as well. But it's natural, even in probably your own personal lives. Conflict is kind of ratcheted up instead of competition. And what you're going to see is much of this is going to come to a head. And how it comes to a head, can happen in many different ways, good and bad. But what you need to do is recognize and come to terms with that. And the reason I bring this up and how it relates to trading is you have to learn to block out the noise, and you got to look at what your core beliefs are, what your goals are in relation to your core beliefs, and then follow that. And that can be your guide when you trade as well, because it will help you understand what your end goal is, which will then inform how much diligence you're doing before you place a bet, on direction, or before you decide to enter and buy a particular coin. And then that will inevitably, if you're doing things correctly, end in success. And that is what I'm going to leave you with today, is 2024 should be a year of success. Whether it's small successes that build into a very big success, or just getting started with planning for how to be successful. This should be the year that you decide to do that. And I will do my part in helping you analyze charts to give you ideas and confluences on what I'm looking at, and what I'm looking for, what I expect. In terms of, everything is conditional analysis, and we aren't predicting, we're projecting areas of interest, right? So, and understanding what to do should things end up in those projected areas of interest is the key to trading. So that is where we're going to end things for today. I do wish you guys a wonderful rest of the year. I will be here with you. We will have a Bitcoin in 60 seconds. I didn't do one over the weekend because I was looking at the chart. I'm like, you know what? It's actually not worth it, because we do need to see some of these closes coming in. So tonight we should have a Bitcoin in 60 seconds video out. If not, you're going to hear from me on Wednesday anyway. We might be doing some longer form videos dedicated, like 10-minute video on Bitcoin kind of thing. We'll see how that goes. We do have a bit of a built-in audience now. And when I say we, I do mean all of you. We're a community now. There's 530 of you here with me, including some close personal friends and even family. There's people who are in industry professionals. There's people who are amateur traders. There's people who are developers who are now hanging out with us here. So, we are a team. We're going to look forward to this new year with excitement, and we're going to plan some damn good trades, that's for sure. All right, you guys have a wonderful afternoon, evening, morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. I got a stall to put this on. I will leave the tunes on for a little while here. We will have this go off in about 15 minutes now. So if you'd like to hang out, listen to some beats, you're more than welcome to. Again, thanks for hanging out, and I will talk to you, at least live, on Wednesday. With all that being said, Landy out.
Forces has announced that a flying disc has been found and is now in the possession of the Army.